What does exiting a bear market mean, and what happens to the market after exiting?
So exiting a bear market basically means entering a bull market,
Hmm.
right? I mean, that's essentially what just happened. And so a bear market is defined by a 20% or more drop. And we did that. And we fell 28% from high to low. As of yesterday, we just went from that low point in October to yesterday's close. We closed 20% higher.
Hmm.
And what that means is that's the start of a bull market, right? And the end of the bear market. Now, things can happen. Things can fall apart. The world is not a perfect scenario, believe me. But we do have a visual here I can share with you, which I think is kind of interesting. Let's use this shot here. Yeah, there we go. These are the bull markets since 1932. All these, and the bear markets for that matter.
Hmm.
All of these little blue spikes and what have you, and you can see, magnitude is kind of amazing. And so what we found in looking up information on this question is that the average bull market lasts for 5 years,
Yep.
has 177% average return during that 5-year period. So that's pretty significant. So what happened yesterday, when theoretically, means that we're in for an average of a 5-year run and 177% gain, of which we've made 20 so far. But you can see there's a lot of different ones in there, and not all of them do that well. And it's maybe a little skewed by some of those
Yeah.
really big spikes in there. So it's we'll wait and see. The judgment's out to see what's happening. Because believe me, I'd still say it's 9 out of 10 articles are saying everything's going to fall apart. Still.
Hmm.
And I still think, again, I raise my hand, I've been saying this since the very beginning. I think that in a traditional manner, when you look at what's going on with the economy, when they raise interest rates from 0 to 5%, we have a recession, most likely a hard recession,
Yep.
right? So that's what everybody's looking at. That's what they're looking at. What they're not looking at is the hardest part to look at, which is the effects of the pandemic
Yeah.
and the pent up demand and the money that was put out. And even the money it's already been spent, let's say, they're still spending because they want to get out and do things. You lock people up for a few years and people want to live, right? And so we're seeing money being spent in services that's offsetting this concept of this hard landing, at least so far, and it's surprising people.
Yeah. We never really modern. I guess modern stock market never experienced the Roaring Twenties, and you can't really judge the market based on that.
Yeah, you can't go back to 1918's dynamics and look at that because it's too far away and too different. Although it did work out sort of like this. There was a high inflationary period. The market did take off. There was pent up demand. There was mask wars. I mean, it's kind of fascinating that some of it was similar. But what is important here is that it needs to be considered. And too many articles I'm just looking at are basically looking at this as if it's the 70s. You got high inflation, rates go up dramatically, and the inflation gets out of control, and rates go up even more, and the markets suffer, and all those type of things. So anyway, and those are all valid, and those are things that we are likely to be suffering through here. However, there's an offset here with this pent-up demand and this money that's coming out as people continue to go do things. So it's a good question.